Good day, everyone. I don't know where you're calling from. Good morning, good afternoon, good night. It all depends on wherever you're watching this video from. I want to tell you a very good day. My name is Godwin, or you can call me Instructor Godwin or KK. I will be the one taking you by the hand in this journey in Market Experience Academy. Welcome once again to this journey. I believe that you will not regret it. Yes, the Forex market or the Forex skill set is worth having because in this very dispensation that we are, you need a skill set. Tech is taking the industry. In the next 10, 20 years, I believe that tech will take over the world. Yes, so it is therefore important for you to have at least a skill set. Is it that you're a programmer, or a Forex trader, or a designer, a graphic designer, whichever one that suits you. But I believe that Forex is and what a kind of investment vehicle whereby if you have the skill set, you can be able to trade any type of securities in the world. Yes, that's why it is one of the needed skill set in this 21st century. So welcome again in this journey. And I believe that if you are starting in this journey, you will not regret it. Yes, I'm going to take you by the hands. It doesn't matter wherever you are coming from. It doesn't matter your educational background. I'm going to hold you by the hands from the infant level where you are to what the advanced level. I'm here to help you. Yes, I'm here to hold you by the hands. I'm here to back you to enter into your promised land. And I promise to be what? Well detailed. So thank you very much. So we go ahead on to this business. Yes, I've prepared a slide for this particular what? Market course or classes. So, but before I dive into the business of today, I would like to tell you about a little background of myself, how I started trading the Forex market. Yes, at least for somebody to come out and say that he wants to teach you Forex market, you need to know the what? The background, the experiences that he or she had before he started flaunting himself to be the one to teach you. So I have been in this industry since 2013. I started my learning curve in this industry since 2013. Yes, 2013. I could remember that when I was in high institution, that was around my year two or thereabout. There's a seminar that a man I knew then was a kind of trying to organize, but because of I wasn't financial buoyant enough, I have to give out my phone just to attend that seminar, a 1 day seminar. I have to give up my little Vodafone as a then just to attend that seminar. But it came to when it gets to 400 level, yes, I was able to like have some cash. I was a little bit financial stable. Then I was able to do what? Pay the same guy to do what? To tell me about the Forex market. Anyway, he gave me the basics. He just taught me a little bit about indicators and all whatnot. But at least that was a foundation whereby I laid my blocks. Yes, that was a foundation that facilitated me to where I am today. So I give kudos to him for actually even bringing me into what? The limelight into the Forex market. Yes, it was one of the instruments that actually helped me to get to where I am today, the knowledge I have today. Yes, the riches, the knowledge, and everything I have today about the Forex market. He made it possible for me. Thanks to him wherever he is. Well, I am here today to do what to help you in this very journey. So it doesn't matter the level where you are. I have about 10 good years experience in this market, and I can beat my chest that I'm the best instructor to hold you by the hands and to get you to the advanced level, to the promised land where you desire. So thank you once more. Welcome to MIA Market Experience Academy. So let's go to our slide for the day. I have actually designed a slide for this program of a nice course for this studies. So just stay tuned and follow me as I share my slides. All right, this is my slide. So welcome to what? Mia Forex Beginners Class. Welcome to what? Mia Forex Beginners Class. Without wasting much time, let's go to the next slide. Okay. So this is what a complete model for what level 1. This is for the beginners. For the people that doesn't have experience. Yeah, it's just like we're in a pre-nursery. Yes, when it comes to this market, we are starting afresh. So this course is for the newbie, for beginners, people that doesn't know anything about the financial market. If you are more like an enthusiast about this market, you will learn. All I just need from you is what? The enthusiasm. Yes, to learn this market. Interest. If you have the interest, you will learn. You can learn anything in this life if you have what? The zeal and the interest. So follow me to the next slide. Introduction to the financial market. When you hear the financial market, what comes to your mind as a person? What comes to your mind as a person? A financial market is a market which people trade what? Different securities. Different securities. They come together to trade what? Different securities. It could be stock, it could be bonds, it could be commodities, it could be what? Currency. Even in these digital days, we have cryptocurrency. It could be what? Cryptocurrencies. But before you embark in trading, buying and selling in this market, you definitely must have the skill set. If not, you will get your hand burnt. If not, you will blow your account. If not, your money will enter what? Voicemail. So it is better for you to do what? To have the adequate knowledge. You cannot be a doctor without going to school to study for 7 years. If not, you will keep guessing. So it is better off for you to do what? To equip yourself with the arsenal, which is the knowledge, the skill sets. And that's what you are about to do. So wherever you are, the age doesn't matter, the school, the foundation doesn't matter, the educational background doesn't matter. You can learn this course. Just put your mind in it. Put your mind in it. Forex is for everybody that is what interested. So just like I said, the financial market is what? A market whereby people buy and sell different securities for the purpose of what? Making money, making profit. So that's the reason why people would trade, invest in the financial market. So we have different types of financial markets or capital markets. We have the stock, we have the bonds, we have derivatives, we have commodities, we have precious metals, we have cryptocurrency, we have currencies, which is the one we are actually looking at. Forex is currency. That's strictly what? Buying and selling of currency pairs from different nations of the world, comparison between one nation of the world to the other. Yes, taking that advantage of their fluctuations in price to do what? To make money. So that's the journey we are going to do what? Take you into. Just sit tight and what? Enjoy the ride. Thank you. Let's go to the next slide. So what is Forex? What is Forex? Forex simply means foreign exchange. The short form is known as Forex or FX or spot FX, whichever one is still saying the same thing. So Forex is what? Foreign exchange. The Forex is what? The basic concept behind what? The foreign exchange or Forex market is for what? Trading currencies, one pair against another. It is the world's largest market, consisting of almost 7 trillion daily volume and is growing rapidly. Forex market is one of the biggest markets in the world. It's highly liquid. Yes, this is where 4,600 banks of the world, commercial banks, central banks, hedge funds, brokers, conglomerates, big companies and corporations participate in this market daily. So there's tons and tons and trillions of dollars money flying here and there, people doing what buying and selling in this market. So that's why this cake can go around if you have the knowledge. Yes, there's virtually cake for everyone. Yes, you so you don't need to rush. You don't rush it. Just have the adequate knowledge, and you what will be a partaker of this cake. So the forex market is what? It's just the comparison between two currencies. For forex to take place, there must be a comparison between what two currencies. I would like to kind of bring it down to a level whereby even the layman outside there will understand what I'm talking about. When you go to the bureau de change, those malams that stand by the roadside selling dollars, when you get to them as maybe you have $100 that you want to exchange to naira, you know that our black market rate as of today is around 755 naira. So you have $100 that you want to do what? To sell to the malam. And the malam told you, okay, Oga, see, I'll go sell, give you at the rate because he is the one to determine what the price for you. Yes, he is the one to determine the price. So the man could say, okay, Oga, I'm going to sell it at the rate of 750 naira. 750 naira for you for $1. And at the end of the day, he'll give you what 75,000 naira for what your $100. That transaction that has been done already is what's called the foreign exchange. An exchange has been done between two currency, naira and what the US dollars. So that's simply what forex. Or we could take it now to two big companies of the world that want to do transactions. Let's say the US, Amazon, or a company that manufactures mobile phones want to buy their components that they're using to manufacture their phones. Because if you are a manufacturer, you may not have the whole components. You may not produce the whole components that you're using to do what? To assemble your phones. So you could go for the cheaper ones, cheaper nations that produce those things in a cheaper rate. So let's assume China could be manufacturing what the motherboard of your phone, the panel of your phone at a cheaper rate. So you could go there to buy, let's say, a panel that worth $1 billion. But you can't carry your dollar to China and do what? Buy those goods. What you need to do is to change your dollar to do what? To yuan. When you change your dollar to yuan, that will give you what? Access to do what? To be able to buy those goods. And when such transaction has been done, forex has what? Taking place. Those two currency pairs, there's a fluctuation in just that transaction. So that is forex for you. I believe it is well said and well explained. That's simply what forex is all about. So with that simple explanation, let's go to the next slide. A little bit history of the forex market. Forex market or foreign exchange dates back to ancient times when traders first began to exchange coins from different countries. However, the foreign exchange itself is the newest of the financial markets. In the last 100 years, the foreign exchange has undergone some dramatic transaction. This is just a little bit briefing of the history of the forex market. Forex market, after the Second World War, the whole economy of the nation or countries were in a chaotic state. So the Western government find it good to come or to coin an agreement known as the Bretton Woods Agreement. Bretton Woods Agreement simply means the tagging of 1 ounce of gold towards $35. 1 ounce of gold towards $35. This agreement was established then as the countries of the world and their economies begin to grow. This agreement was not accommodating them anymore. So the then president of the United States, in the person of Richard Nixon, abolished the Bretton Woods system and did what? Allow currencies to flow based on the law of demand and supply. At the first time, the it looked as if it's going to be rigid, but as the invention of technology begin to do what? To emanate in its peaks, this facilitated what? The determination of such flow of what? Currencies and their demands. So technology actually helped to facilitate this process. So this is how the forex market do what? Came about. Currencies were left to do what? To float based on demand and supply, knowing that the American dollar was what being in the chief seat, was the one piloting the whole thing. So, but as the nerds or guys that has brain, the business machines, the first class guys that has brain for business, came up and designed a platform that will share the same liquidity as the interbanks. Formerly, Forex was actually meant for the big boys, the banks. They were only the one participating in the Forex, because you and I that are the retail traders does not have the kind of capital that those guys have to participate in the Forex market. But as the business smart guys came in, they designed platforms that would give people with low capital access to the same liquidities as the commercial banks and the central banks. So today, you and I, being the retail traders, have access to this same market. Now we can use our little money to trade at about 1,000 units, whereas these guys were trading 1 million units with their money. So you can see that the coming of the brokerage firms actually made it easy for you and I to be able to to participate in the forex market. So, and it is speculated that this market by the year 2030, it will get to $7.3 trillion daily turnover. This is one of the biggest markets in the world. The biggest market is bigger than the stock exchange. The New York Stock Exchange is bigger than it, almost like 4 or 5 times bigger than it. So the foreign exchange market is worth having. Banks of the world participate in this market. We have the commercial banks, we have the central banks, we have the hedge funds, we have the brokerage firms, we have the retail traders, the speculators that speculate with their little cash. They all participate in this market. So, my dear, it is a skill set to have in the 21st century. Please, is a must have. So let's just go to the next slide. Now, why trade Forex? Do you think you just want to trade Forex because your neighbor is trading it? Or do you think you just wanted to trade Forex because the formal work you are doing is not really paying your bills? But let me surprise you. Forex is not what a get-rich scheme, please. Never you think that when you enter into this market, you will start making millions of dollars per night. This thing will be yahoo. Seriously, it's not blood money. You have to follow the process. 2 processes to be followed. Yes, you have to learn a lot of things, know about risk management. So these are the things, it will take you time. Just like if you want to acquire a degree in medicine or engineering, it will take you more than 5 years. Forex market is not less. It's a career on its own. So it will take you 5 good years or 3-4 years to do to gain stability and knowledge before you start becoming consistent in what you do. So why trade Forex? The number one thing we have in the numerated list there is minimal or no commissions. Minimal or no commissions. When you hear minimal or no commissions, unlike other businesses out there, you need to rent a shop, you need to settle the agent, you need to settle the lawyer. If you're in a place like Port Harcourt in Nigeria, you even have to pay area boys, the hoodlums. You need to pay them some amount of money, the community boys, before you can be able to start businesses. So imagine such scenario. By the time you settle Mr. A, B, C, D, you'll be running out of cash to even start the business. So, but in Forex, it is not like that. It is just your skill set, your laptop, your internet, and your starting capital. These are the 4 things that you need to start. You do not require a store. goods. You do not require any agent. You do not require to settle anybody. It is you being your own boss, being in charge of your funds. That's why Forex market is one of the best businesses out there. You manage risks. There's no story that touches the mind. Nobody is coming to tell you who can book stories. You are the one to manage the account by yourself. If you make losses, you see it for yourself. If you make profit, you see it for yourself. So that's one thing that is what very good about the Forex market. So minimal or no commissions. The brokerage firms that actually house the money which you deposit to give you access to the financial market only collect a little commissions from you called the spread. It's very, very minute, not too much. Yes, that is what they charge you. If not, there's nothing less, nothing less, nothing more. So that's one of the reasons why you should trade Forex. It doesn't have wahala, it doesn't have headache, it doesn't give you headache. It's not expensive. It's not expensive to start. Yes, so that takes us to the next one. Instant execution of market orders. Instant execution of market orders simply means that at a click of a button, at a click of buying button or selling button, your order is being filled in the market. That is, if you are buying, there's another person out there that wants to do what? To sell. You do not need to wait and look for customers to come before you sell your goods, just like the offline businesses. You will stock your what? Your store with the goods and wait for customers to come to what? To patronize that goods. But in the Forex market, we are not looking for buyers nor sellers. They are already there waiting. So by the click of your buy button or sell button, your orders are being filled in the market. That is one thing about the market. It's very liquid. The Forex market is very liquid. That's why you heard me say from the beginning that Forex market is about what? $7 trillion in daily turnover, not yearly, daily turnover. So you can see that it's a highly liquid business. So at a click of a button, immediately you click your buy or sell button, your orders will be filled in by your appropriate brokers. So that takes us to what? Short selling without an optics. Short selling without an optics. Short selling without an optics simply means that in any condition, in any prevailing condition of the market, you can as well buy or sell. Whether the market is trending, whether it's ranging, whether it is making a higher trend or a downward trend or ranging, you can still do what? Buy or sell in the market. It all depends on the type of trader you are. You could be a scalper. You could be what? A day trader. You could be a swing trader. You could be a position trader. It all depends on your style of trading. There are people that enters the market and just spend just 2-3 minutes and they're out of the market. These are scalpers. And we have the day traders, the guys that can stay for a day, a minimum of a day or maximum of a day before they leave the market. And we have the swing guys, the guys that can swing the market for weeks, even to a month. We have the position traders that can stay weeks, months in a particular position. So it all depends on the type of trader you are. It doesn't matter the prevailing market condition. You could either buy and sell. And when you compare this to what the offline market or businesses, you could see that there's a lot of factors that could affect your businesses outside there. The rainy season can be number one of it. You do not sell because of what? The condition of the weather, accessibility, location where your business is what? The location where your business is located. If it is not where the right people or the right buyers are, you will not sell. If you have poor road networks, you will not sell. So these are what limitations or factors that what will limit your smooth running of your businesses. But in the Forex market, it's not like that. It is not like that. Whether the market is moving up or down or ranging, you could still make money in this market. all you need is what? The skill set, the knowledge. Knowledge is power. Knowledge is power. So that is that for what the short selling without an optics. Volatility. Volatility simply means the frequency at which different currencies changes hand from the buyers to the seller. Let's assume the dollar or the major currencies, which we will still get to. Dollar is known and recognized all over the world. So the frequency at which the demand of dollar changes hand from the buyers to the sellers is known as what? Volatility. The forex market is highly volatile because of the liquid nature of it, because of the volume, the amount of money that is brought into this market. So that is why you should trade the forex market, because it is highly liquid. It is volatile. There's no wasting time in it. Immediately you feed in your orders. Immediately you click the buy button or sell button, your orders are being filled in by your brokers. Yes. So that takes us to accessibility. You can see that I was telling you about that if you don't have good road networks, you could be selling the cheapest or the best goods in the world offline, but nobody can reach you because you have poor road networks, which is not motorable. Customers cannot be able to patronize you. Or in the forex market, my brother, it is not like that. You could even trade forex in the moon. Yes, if you have the internet in the moon, my brother, you can trade forex in the moon. All you just need is what? Your internet, the skill set, your laptop or your phone, and you're good to go. The capital, yeah, your starting capital, you're good to go. That is all you just need. That is all you just need to trade the forex market. You don't need anything else. Just these few things I mentioned. These are what you need. With the help of the internet, you can access the forex market any day, anytime. The forex market runs 24 hours. It is the biggest market in the world that never sleeps, cutting across through all the sections in the world, the zones. It cuts across all the zones and timing in the world. So it is one of the biggest market that runs 24 hours. So with the help of the internet, you can access the market, whether you are in Oklahoma, whether you are in Australia, whether you are in Nigeria, wherever you are in the world, you can access the forex market. Unlike your businesses, you cannot operate your business while you are away. You know that. Yes, I know that technology is actually making it possible for us these days to do what? To use cameras, but it still doesn't matter because you are not there. Yes, you can only talk, but you cannot carry actions. Exactly. So, forex market is what? The best market for you and I. You can access it anywhere in the world. So that takes us to technology. With the help of today's technology, it is very easy for us to do what? To access the same liquidity that the big boys, the banks, or the hedge funds are accessing. Yes, we have the same access, the same liquidity with the help of technology, sophisticated technologies provided by our brokers, the brokerage firms that give you the access to access this market. You can trade the forex market. You just need to have what? Your laptop, your internet provision, the knowledge, the starting capital, and you're good to go. With your smartphone, you can even trade the market. So technology-wise, things are so easy for us to do what? To trade in this day. You can make so much money in the forex market just with your phone. Just with your phone. But you need to have what? The knowledge. You can see that I'm hammering on the knowledge. The knowledge is of essence. It is of essence to have what? This knowledge. Because in as much as I'm telling you that you can make this money, you can as well lose your life savings in one day if care is not taken. So that is that for what technology. Then possibilities and what opportunities. Possibilities and opportunities that are in the forex market. The reason why you should trade forex, there are endless possibilities and opportunities. Just like as I am anchoring these classes, you can anchor these classes if you have what the knowledge. You can teach people in the world, anywhere in the world. You can teach people about this forex, about forex. Yes, you can have classes, coach people, and they will pay you for that services. Yes, you can partner with other brokers. IB, which is so-called IB broker. You partner with other brokerage firms to teach students, and you'll be paid commissions for it. You can be also your fund manager. You can manage your own fund. There's a saying that says that there's nobody that can manage your fund as you, and that is exactly true. In the forex market, if you have the knowledge, you can manage your own fund by yourself adequately. So you can see that if you have this knowledge, nobody can do what manage your fund for you. You will be the one to do what to manage your own fund. You are your own boss. Yeah, exactly. You are your own boss. No stories that touch the mind. You are the one controlling the market, making your profit and losses at the same time for yourself, without no excuses. So you see the endless opportunities. You can have an academy just like me, just like I have Market Experience Academy. You can establish an academy where people will come and learn, and they will pay for that services. You can also manage funds for investors. Exactly. You can manage funds, big funds for investors. And at the end of the day, you guys will reach at an agreement. Let's say 50-50 interest to share the profits that comes that you realize at the end of the contract. So these are what the endless possibilities that are what in the forex market. You can manage funds for a company or institutions. You can manage your own funds. You can also be a copy trader. You can also be an instructor teaching people. You can also partner with brokers, be an introductory what broker too. These are what endless opportunities. Now that takes us to regulations. The forex market is not kalu kind of game. It's not all those networking markets that you see here and there, flying here and there, or schemes for Ponzi schemes out there. The forex market has stayed more than 100 years. You know about commodities like gold and oil. These are markets that have lived in test of time. So they are older than even I that is teaching. So the forex market is not a market of today. There are no vehicles for scam and fraudulent activities. It's a legit market. It's a legit knowledge. It is a legit business here today. So it is regulated. Every countries of the world, there are bodies that do what regulate this market. Just like we have the ASIC, ASIC, which is what Australian Securities Investment Commission. These are body in Australia that governs or regulates brokers that participate what in the foreign exchange. We also have the Cyprus Security Exchange Commission in Cyprus. They are what regulated bodies. We have so many of them. We have Nigerian SEC. We have so many bodies that regulate the financial market to determine the smooth flow and transactions between the buyers and the sellers and what the middleman, which is the brokers. So this market is what regulated. That's why sometimes when you want to choose your choice of broker, you have to do some studies to know whether that brokerage firm you are housing your money or depositing your money into, whether if they are regulated. Maybe as we progress in our journey, I will recommend some other good brokers for you. Now that takes us to what the last and not the least. Forex markets can be traded anywhere. There is nothing beautiful like a business that you can do anywhere. You can even trade forex in your toilet. You can even trade forex in your bedroom. You can make a money that nobody can make in a year in your bedroom. It's such a comfortability. It's how your life will be so sweet with such a skill set. So you can trade forex in Lagos, you can trade forex in Abuja, you can trade forex in London, you can trade forex in Oklahoma. All you need is to carry your laptop and your internet provision in your bag, and you have the skill set, and you have a brokerage firm which you have deposited your capital with. That is all you need. You can access the forex market anywhere in the world. Unlike the offline businesses, if you establish a business in Nigeria and you want to take it to Ghana or even nearby African country, you know that it will cost you a fortune to do that. But in the forex market, it's not like that. All you need to carry your laptop. You carry your laptop in your bag, carry your internet, or you go over there and subscribe the internet that that particular country is using. You set your provision, you're there. You open your platform, you analyze your market, and you do what you buy or sell. It's as simple as that. So you can access the market anywhere you are. So that does bring us to what the end of why trade forex. You can see the reason. The reasons are what enormous. You can see the reason why you trade. You should trade the forex market. These are genuine reasons. So think about it. Let's go to the next slide. What is traded in forex? What is traded in forex? We trade money, we trade currencies, different currencies. But before we proceed, we will talk about the two types of currencies we have. We have two types of currencies. We have what the major currency, and we have what the exotic currency. Major currency, they are what currency of developed countries of the world with stable economy. They are what countries of the world with stable economy. An example of such countries' currencies are the USD, the US dollars, the Great British pounds, the euro, the Australian dollars, the New Zealand dollars, the Canadian dollars, the Swiss francs, the Japanese yen. These are what developed countries of the world with stable economy. They are known as what? Major currency. They are called major currency because their currencies are in high demand. They are highly liquid. They are of what? High demand. This is why they are called what? Major currencies. Then exotic currency. While exotic currencies are what? The opposite of major currencies are what? Exotic currency. They are underdeveloped currencies of countries with what? Unstable economy. These are currencies of underdeveloped countries of the world. They are known as illiquid currencies. Illiquid currencies. That is, their demands are very low. Their demands are very low. And they are currencies of what? Third world countries, developing nations of the world. Their economies are not stable. E.g., we have Nigeria is number one example. We have South Africa. We have the Turkish lira. We have what? The ZAR, the South African rand. We have the Senegal dollar. Sorry, not Senegal. Singapore dollar. We have the Singapore dollar. We have the Norwegian krone, and we have what? The Chinese yuan. These are what? Exotic currencies of the world. So at least with this now, you know that we have what? Two types of currencies in the forex market: the major currency and what? The exotic currency. If somebody asks you to what? Explain what major currency is, I believe you can be able to do what? To explain it outrightly. All right, let's move to the next slide. So before we move further, we are still on what is traded in the forex market. So I actually what came up with this tabulation because it will help us when we start diving into what analysis. In the forex market, we have two types of analysis. Two types. We have what the fundamental analysis and what the technical analysis. So the fundamental analysis actually drives the market based on the fundamental news. When the CBN of these countries, their governors are speaking, it has high impact on that particular currency. So it is very, very important that you know these currencies and their governors for fundamental sake, for the sake of news. Yes, we have traders that trade news, the forex market. So it is it's gonna do you good to do what? To know all these governors. So that when you come across them in headlines, in news, you will know what to expect. Exactly. So this takes us to what the types of currency, the major currencies of the world, their nickname, their central banks, and their governor. Yeah, the major currency. We have 8 major currencies. We have the USD, the Great British Pounds, we have the Euro, we have the Australian dollar, we have the Canadian dollar, we have the New Zealand dollar, we have the Japanese yen and the Swiss francs. Now, the nickname for the US dollar is known as the buck. Their central bank is known as the Fed, Federal Reserve System. Then the governor of the Federal Reserve System is known as Jerome Powell. Jerome Powell. Jerome Powell is what? The chairman of the Federal Reserve System. Then the Great British Pounds, the nickname for the Great British Pounds is known as what? The cable. You could be hearing some guys chatting in a forum, some traders that are experienced in the market using these terminologies. So you shouldn't be a novice. When you hear these things, you will know that, oh, they are talking about Great British Pounds. Oh, they are talking about US dollars. Yes. So it's a nice thing to know. So we have what the Great British Pounds, the nickname is known as cable. The central bank is known as what? Bank of England. Bank of England. Bank of what? England. That's it. Bank of England. Then we have what? Andrew Bailey as what? Their governor. Then we have the euro. Euro is also known as fiber. Fiber. And the central bank is known as ECB. European Central Bank. And their chairman or their governor is known as what? Christine Lagarde. Christine Lagarde is known as what? Their governor. So we have the AUD, Australian dollar. The Australian dollar is known as Aussie. It's nicknamed what? Aussie. And the central bank is known as what? RBA, Reserve Bank of Australia. Reserve Bank of Australia. Their governor is known as Philip Lowe. Philip Lowe. I believe you are taking notes. Anyway, this tutorial will be uploaded on YouTube. So expect it on my on my YouTube channel. But it's always advisable to do what? To take some notes. So we have what? CAD, Canadian dollar. It is known as what? The loaning. The loaning. And the central bank is known as Bank of Canada. Bank of Canada. Bank of Canada. And their governor is Steve Macklin. Steve Macklin. Steve Macklin. Steve Macklin. Yeah, forgive me for the pronunciation. Steve Macklin is what? Their governor. So we have the New Zealand dollar. The New Zealand dollar is also known as Kiwi. It's nicknamed what? Kiwi. Kiwi. So the central bank is known as Reserve Bank of New Zealand. Reserve Bank of what? New Zealand. And their governor is known as Andrian Orr. Andrian Orr is what? Their what? Governor. Then we have the JPY, Japanese yen. The nickname is known as yen. Yen. Then the central bank is known as Bank of Japan. Bank of Japan. The name of their governor is Ueda Kazuo. Ueda Kazuo. Ueda Kazuo. I hope I'm pronouncing it very well. Ueda Kazuo. Then we have the CHF, which is known as the Swiss francs, which is nicknamed Swiss. Swiss. The central bank is known as what? Swiss National Bank. Swiss National Bank. And their governor is known as Thomas Jordan. Thomas Jordan. So these are what? The 8 major currencies of the world, their nicknames, their central banks, and their governors. It is very, very important for you to know this so that it will help you to understand the impact of the market when these governors are making speeches. It moves the market. There's always a fluctuations in demand and supply. So it's going to be a good thing for you to have it at the back of your mind. So that takes us to the next slide. Some examples of what are traded in the forex market. We have talked about the major currencies, which are what? The 8 major currencies. We have the USD, Euro, Great British Pounds, New Zealand dollar, Australian dollar, Swiss francs, JPY, and CAD. These are what? The 8 major currencies we have. Now we'll be entering what? Major currency pairs. Major currency pairs. We have 3 types of currency pairs in the market. We have the major currency, the minor currency pairs. Sorry, we have the major currency pairs, we have the minor currency pairs, and what? The exotic currency pairs. So take note. When we're talking about currency, types of currency is totally different from currency pairs. Please take note of that. So when we're talking about major currency pairs, major currency pairs are currencies that involves USD. These are currencies that you couple with the other major currencies. When you couple USD, the US dollar, with the remaining 7 major currencies, they are known as what? Major currency pairs. For example, we have what? The Great British Pounds US dollar, the Euro US dollar, the USD JPY, the USD Swiss francs. These are examples of what? Major currency pairs. So we have what? The minor currency pairs. Minor currency pairs. Minor currency pairs are currencies that what? Involves all other major currencies apart from US dollars. When the 7 major currencies pair themselves together in consideration of what? The euro, the Great British Pounds, and what? The Australian dollars, they are known as what? As the minor currency pairs. When euro, Great British Pounds, and the JPY are used as what? The benchmark currencies. When you exclude US dollar and what? Couple the remaining major currencies back to back, they are known as what? Minor currency pairs. Example is Great British Pounds JPY, or you can see the one we listed here. We have what? Euro, Great British Pounds. We have Australian dollar JPY. We have NZD CAD. These are all what? Minor currencies. Minor currency pairs. Alright, that takes us to what? Exotic pairs. Exotic pairs are currencies that involves one of the major currencies and another currency outside the 8 major currencies. None of it is well understood. Exotic pairs are currency that involve one of the major currencies and another currency outside the 8 major currencies. Example is what? US dollar, Singapore dollar. This is my mouse. Okay. We have what? US dollar, Singapore dollar, Great British pounds. You can see that US dollar is what? A major currency, right? It's among the member of what? The major currencies. Then Singapore dollar is known as what? Exotic currency. You can see, and it's outside what is not included in what? In major currency. So when you pair the major and the exotic, you have what? Exotic currency pair. When you pair the major currency and the exotic currency, you will have what? Exotic currency pairs. We have another example: the Great British Pounds, the Sweden krona, the Sweden krona. We can have what? The US dollar and the Nigerian naira. The US dollar and the Nigerian naira is an example. The US dollar and the South African ZAR is another example of what? Exotic currency pair. I believe it's well understood. All right. That takes us to the last slide for this episode. The major and what? Minor market participants. The major and the minor market participants. I think this is where I will actually draw the curtain for this first episode. We are going to continue the second episode in the next class. So please take your time to watch this video over and over again. The art of mastering comes with you doing the same thing repeatedly. So watch it, take notes, watch it again and again. As you watch it again and again, you'll be able to familiarize yourself with the Forex terms, the terms we use in the Forex market, so that when you start plotting the charts or reading fundamental news, these things will not be strange. You understand? So please, I will upload this video in our YouTube. I want you to support me by clicking the subscribe button, and also the notification, so that whenever I update the channel, you will be the first to do to get notified. Thank you very, very much, and have a blessed day. So thank you so much for this class. You will see me in the next episode, which is episode 2. So please do yourself a favor and digest this class that we have done today. Go through it over and over again. Thank you.